Trader Tina here once again from ShortMeTina.com with my daily recap. Today is Friday, so I want to say TGIF. Thank you for spending this time in this moment with me. So if this is your first time, let me formally welcome you. Welcome to one of our ShortMeTina videos. Do me a solid in the comment section. Just drop us a comment, say hello. If you are returning, I would like to say welcome back. All right, so we're going to jump in really quickly and get into a recap of the overall markets right now. What you're looking at on your screen is the SPY S&P 500 daily chart dating back to around 2017. As always, I usually do about 2 years worth of data. The market is slightly flat to down on the day. I see a quote here, an ending quote of 298.09. We're off about 0.4% on the day. So for the past 4 or 5 trading days, we've essentially positively traded above that resistance level here, this black line of 293 to around 295, but we have not surpassed all-time highs of around 302. We got into that 300 mark, I want to say on 2 occasions. You can see it denoted here by these 2 red arrows. Pardon, we got around 300 in July, had that 7% pullback. We got into that 300 range most recently in September. Again, experienced another 5 to 7% pullback. And right now it looks like we're gearing up to at least at minimum retest that 300 to 302 level. Like I've indicated before, like I indicated yesterday, I think what can propel the markets to all-time highs, perhaps even above, is earnings, right? So earnings seasons just got underway this week. Things are still rolling out, and if things continue to be positive, then I can see the markets actually once again retesting all-time highs and perhaps, like I said before, even surpassing it. So I'm not really doing much right now. For me, it's a wait and see, let the market dictates what it wants to do. Yes, because it's less than 1% away from all-time highs, it looks like it can actually get there and again and surpass, but the markets are very tricky and in similar fashion, right? Anything can happen, anything is to be expected, and we can possibly see a 20% or 10-15% correction. Am I saying that's going to happen? Absolutely not. But I think it's always wise to always entertain the possibility that these things can happen. So from a risk reward perspective, yes, I remain short the market. However, that can change providing that the market starts to show me different things. So right now I'm just kind of waiting to see how earnings play out, and then I will adjust my trades accordingly. What else? IWM daily chart dating back to 2017. So we haven't done much the past 2 to 3 trading days, essentially trading sideways, similar to the SPY. We're down about 0.44% on the day. I see a quote here of 152.66. Again, earnings season is underway, and I think that's actually going to either propel the IWM to that resistance 160 mark that has proven to be a huge psychological barrier for the past 2 years, or it will have the market pull back and perhaps break that support level of 143 to 145, or like we've been doing for the past 2 years. And I know if you've been listening to my videos for, I don't know, even if you've been listening for only 2 weeks, a lot of these videos perhaps sound a bit repetitive and redundant. But truly, that is really what is going on in the market. And I'm just trying to show you that, well, not too much has changed. Granted, we've had like these swift 25% pullbacks, and we've had like these 25% or 20% run-ups. But if you kind of not extrapolate, but if you take a elongated view, right, you kind of zoom out and pull back and look at a longer term chart, you'll see that the SPY really has done a lot of quote unquote nothingness within the past 2 years. Just look at the chart, right? Again, we've been bouncing through support of around 144 to resistance of 160 for 2 years. The only time in which we actually buck that trend would be here, starting in May of 2018 all the way to October, where we traded above 160, and back most recently around this time last year, where we traded above that 144 support level. So outside of that, for 2 years, we've done essentially the same thing, trading within this 10-point spread. So you can exploit that spread. That's one way to trade the markets, or the IWM in particular. And another way would be to actually wait until the market confirms a movement, and that confirmation would be either a break above 160, like I stated before, or a break below 144. Does that make sense? If it does, comment in the comment section, let me know. If it does not, comment in the comment section and let me know. What else? All right, so let's wrap it up and round it out quickly with ticker BNGO daily chart. Let's just focus in on price action for the last 3 trading days, or more particularly or more specifically today. Stock is up north of 40% on the day, so congrats to the bulls in that respect. It's actually up as well in after hours, another 16%. I see a quote of 221, so granted we closed at 190, but if you take into account what's going on in after hours, we're somewhere around here. So that's actually good after hours price movement. If we didn't have what was going on in after hours, then I would lean a little bit more bearish, considering what this candle looks like, and the fact that we went as high as north of $4 today to pull back extremely to close at 190. So I would monitor, if you're long or looking to get long, I would monitor exactly what this stock does in pre-market on Monday. Now, if it can continue more of what it's doing right now in after hours, meaning trending up, that is a good sign. If we can actually take out yesterday's high of around 232 and perhaps even hit that $3 mark before pre-market, hit that $3 mark in pre-market before the market actually opens, that bodes well as well for the longs, or if you are a bull. So that's what I'd be paying attention to with ticker BNGO heading into Monday. Let me recap a little bit because it seemed like that was all over the place. So up about 37% on the day. Just based on this chart as a standalone, it does not look good. However, if you take into account what's going on in after hours, the fact that it's up 16%, right, says, you know what, maybe there's some buyers stepping in. To confirm, I'd pay attention to what actually goes on in pre-market. If it can continue being bid up, like if new buyers are jumping in pre-market and they drive the price of the security all the way to 3, or perhaps even retest today's high of 4, that is a good sign if you're long, and it would signal that perhaps the stock wants to open up a little bit higher on Monday and perhaps even continue the run that it saw today. But those things need to happen. If, however, on Monday you find that the stock is actually regressing back and it's actually declining in pre-market, and we dip below today's closing of 190, that is not a good sign. All right, so pay attention to exactly how the stock opens up in pre-market as well as opens up during regular market hours. That should dictate whether or not the stock wants to sell off or if it wants to run. Hope that makes sense. Hope I cleared it up. Let me know. All right, so we're going to cap it there. Tina here once again from ShortMeTina.com. If you enjoyed any portion of this video, I'd like for you to do 3 things for me. 1, comment in the comment section. Let me know, what did you think about my analysis? That's the first thing. Super, super important. Like the video, thumbs up. You didn't like it, thumbs down. Number 2, do me a favor. If you want to hear more videos like this, please subscribe at our YouTube channel at ShortMeTina. And lastly, I've been trading for 15 years. So if you think you can learn anything from me, then definitely head on over to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening. And as always, thank you for the support. Enjoy your weekend. TGIF. I will talk to you on Monday.